next guest may not be in that camp. I'm going to bring in Walser Wealth Management President Rebecca Walser. All right, Rebecca. So again, I kind of want to echo the question I had just had for Robert. All of these firms now just changing their minds a week ago. Recession. Market's going to crash. Now, maybe not.
Yeah, Charles, this is like fear of missing out for investment banks calling the economy and the recession, the soft landing, and all of these things. Bank of America is joining the bandwagon, JP Morgan, everybody sort of, okay, we're not going to have necessarily this recession, and we might even push it until next year. I don't know. I'm with Robert. I see the Fitch downgrading us. I see ISM coming in for 9 consecutive months to the downside, even if it doesn't change aggressively. You know, it's manufacturing down. We see services down. We see China with deflation. There's so many negatives that I just don't understand. The bandwagon, fear of missing out. Let's get on it. And everybody is saying a soft landing, no recession. In fact, it's literally, I just feel like I'm reading a foreign language every day of all of these forecasts that are so positive. You know,
what's interesting to me is that I just think everyone's miscalculated it, and it's going to happen probably later than they thought, because you just can't account for the kind of cash they put into this economy. But there are other signs. Here's the one I just saw. The real imports of goods and services, it has cratered. It is negative now. Again, this is something you don't normally see in recessions. And there's a whole lot of things like this. You may call it anecdotal, but this is kind of hard evidence here. And it just means really you got to adjust your thinking. How are you doing that for your clients? Because on one hand, people have to come to you and say, Rebecca, the market is killing it. I want to have a part of that. On the other hand, you're saying, hey, at some point real soon, Wall Street's underestimating this economy and we're going to fall off a cliff. How are you navigating that?
It's the most difficult thing that we've ever had to professionally do, because so many voices are in opposite of each other, Charles. And you talk about all the liquidity that's out there, but we know the M2 money supply is down 5.8% year over year. That's depression level contraction. I'm not kidding about this stuff. So it's really hard. We see the value right now still in hard assets. Commodities we think will be the winner when the market does actually show the results of all of the bad pain that we're feeling. Until then, you're right, Charles, we have to play the equity game, but we're hedging our bets there because we just are afraid that this could really go south any moment. It could be this afternoon. It's that tedious, and we're right on the precipice. So I'm not expecting we get out of 2023 without some big problems.
Before I let you go, we just had the bond yields up. They are really spiking like crazy. My great fear is that we take out that October high. I think that will be the wake-up call for everyone. I hope it doesn't happen, but it feels like it might. What are you doing about that? Because I'm worried the bond market. I don't know if I would want to be in bonds right now.
That's it. That's why we're looking at commodities and hard assets with true intrinsic value, because any kind of financial derivative, which stocks and bonds are both financial derivatives, underline. And if you look at the yield curve, Charles, last Wednesday, we had over 110-point inversion between the 2 and the 10. These flashes are important for people like us to track the technicals. And it does speak to the fact that something is amiss. And so, yeah, it's hard right now to go either stocks, bonds and feel confident about that position. You really have to be monitoring this on a daily basis, monthly basis, weekly basis, and making sure that you're hedging correctly, because all of this is really precarious, unfortunately.
Well, I know. You've called it, and that's why we're glad you're able to spend some time with us now. Thanks a lot, Rebecca. Appreciate it.
Thank you.
All righty.
Thanks, Charles.
Hey, coming up.